This is Kyrill Asatur, and this is Centerfin's Collective Weekly for the week ending July 26, 2024. As always, we like to highlight a handful of things that we think are interesting as it pertains to markets and investing. This week, we're going to give you an update on the economic data that we received. Next, we'll talk about some updates on the AI industry and some really interesting news that happened this week. And last but not least, an update on crypto. 3 areas that we'll cover. Starting with economic data, we had GDP numbers earlier in the week that came in well ahead of expectations. Expectations for quarterly GDP for the second quarter of the year were at 2%. We came in at 2.8%, so significantly higher than expectations and significantly higher than the first quarter, which was at 1.4%. The economy in the first quarter looked like it decelerated pretty significantly from the fourth quarter of last year. And so again, we've been hearing a lot of recession calls, but this number at 2.8% was a lot higher than expected. And so it looks like the economy is actually still chugging along. 70% of the economy is the consumer. The consumer was strong. It reported, the economic report was that consumer spending accelerated by 3.2% for the quarter. And that represented about 1.7% of the total 2.8% of GDP growth. The consumer is still hanging in there. Now, 2 caveats. One is that this is the first report and there will be another 2 revisions to this. And so when you look at the first quarter's numbers, they came in originally higher than the last number that we saw, which is 1.4%. So these may get revised down. The other things to note, the bears or the people that are in the recession camp will say that a lot of this number is also driven by government spending, drawing down from savings and inventory build. We will see how this plays out, but obviously the consumer looks like it's still hanging in there, and that's an important part of economic growth. And it's a good report, and on the one hand, it's not indicative as to why the Fed has to cut, but on the other hand, inflation actually came in within expectations. The PCE deflator, which is the Fed's preferred inflation gauge, came in at 2.5%. For last month, and that is in line with expectations. So inflation continues to come down to the Fed's target of 2%. And expectations for rate cuts based on this GDP data and this inflation data are that we're going to see rate cuts as soon as next week, but potentially in September. And we might see even a 50 basis point rate cut at some point. The good economic data counterintuitively allows the Fed to cut interest rates, because the Fed's 2 mandates are price stability and full employment. Employment, while weakening a little bit, is still hanging in there, and price stability, which is really inflation, has actually come down pretty steadily. Good economic data, consumers hanging in there, and it looks like the Fed has much more wiggle room to cut. Second, we wanted to give you an update on what's been going on in the AI universe. So 2 big pieces of news this week. One is Mark Zuckerberg of Facebook/Meta released this week. He was doing his best 90s boy band impression when he was doing this, but he released his latest Llama large language model 3.1. This is the biggest open source model that's available out there. They have an 8 billion parameter model, a 45 billion parameter model, and a 70 billion parameter model. So these are Meta's own models that were developed open source, and they're available to users to use even in their own environments. You can effectively take the model off the cloud and use it in your own environment. And they score just as well as the latest ChatGPT, Gemini from Google, and Claude, which is Anthropic's models that are the leading closed source models. And so why is that important? Zuckerberg makes an analogy to Linux as an open source operating software system that became popular in the 90s, as we were seeing kind of Microsoft evolve as the most popular PC operating system then. And he believes that having an open source model allows for developers to build faster and use these AI technologies within their software. And we think it's actually a pretty significant development, because we do think AI will be incorporated in pretty much every industry, as we've said, across different use cases. And Meta making their model open source, we think, is a pretty significant step in that direction. The second piece of news was from OpenAI, which is obviously the company behind ChatGPT, which is one of the more popular LLMs that's closed source. They released something called SearchGPT, which is their first direct attack on Google. So it's a search-oriented LLM. And Why is that important? For some of us, we've used ChatGPT as a replacement for Google for a while now, but this is the first kind of consumer-oriented solution that directly competes with Google or designed to compete with Google. Google's stock dropped 3% on that news. We do think that AI has the capability of really disrupting a lot of different technology industries, and search being one of them. Lots of stuff happening. It seems every week there's news. This industry is moving very quickly. And last but not least, in the crypto world, we had our first Ethereum ETFs approved this week to start trading. We have, I believe, 3 ETFs from BlackRock, VanEck, and Grayscale that were approved to begin trading. Now, this is following, obviously, the Bitcoin ETFs that were approved to begin trading earlier this year. One thing to note is that Ethereum is not the same as Bitcoin. I know it gets put into like the broad crypto bucket, but Bitcoin's use case is really like a digital gold. And Ethereum is really like a platform, a network for developers to build on top of using its smart contract technology. So you can think about it as an analogy. You can think of Bitcoin as digital gold, like a scarce asset that has its value because of that limitation on how much Bitcoin will ever be mined. Ethereum is a little bit different in that you can think of it more as a software company that people use to build products on top of. And so the price of Ethereum goes up and down based on how much it's used, how much supply and demand there is for it, obviously. But the demand comes from people that are using it to build products, decentralized finance applications, NFTs, stable coins that use Ethereum need to buy Ethereum in order to be able to build those applications on top of it. And so those are the two different ways to think about Ethereum versus Bitcoin. Again, not investment advice, but a very different type of offering between Bitcoin and Ethereum. Bitcoin, digital gold. Ethereum, think about more as a software company. Ethereum also has competitors in Solana, Avalanche, and others, while Bitcoin doesn't really have any competitors. So something you keep on top of and keep in mind. But that's all we had for you this week. As always, let us know if you have any topics that you'd like for us to discuss next week, and we will see you then. Have a nice weekend. Bye.